I am Molly Stellarch. I work with Pathstone. I provide technical assistance to all the New York resident-owned communities. Today we're going to be hearing from a few different folks about this new-ish, relatively new initiative through New York State Homes and Community Renewal called the Homeownership Preservation Initiative, and specifically how it relates to manufactured housing and how you all can use it hopefully in your sort of dual roles as individual homeowners and community owners. So just housekeeping, I forgot to mention this the last couple times, but it is helpful to stay on mute if you're not talking, just to cut down on background noise. I can also mute people as the host. I'm not trying to be rude, and you certainly may unmute yourself, but sorry in advance if I mute you. So without further ado, I think I'll just hand it over to Jon Greenbaum to do the rest of the introductions and get us going.
Well, hello everybody, and I think I have met most everybody from was it Thursday and Saturday. So I will now, because I have this, I can share. So I will go ahead and share a PowerPoint and slideshow from beginning. Let's see, I want to go backwards. Am I going backwards?
Forward.
There we go.
There we go.
So I'm going to invite everybody to write, in the chat section. And I don't know what to do if you have a phone, maybe skip it. But if you can type in what you'd like to get out of this webinar, and we're going to read those as they pop up. So how are we going to read it? I'm going to have to stop this, share, and then look, right? So this way we'll be able to see if we are on the right track and meeting your expectations. And at the end, we'll go over to see if we got people's expectations met.
It's in there.
Yeah, but
And if anyone's having trouble locating the chat, I just put something in and just put something in, so you should see a little one by the place you can click to open that up.
So Anne is saying she'd like to find out about manufactured home financing at reasonable rates. Tips for refinancing, making refinancing simple. That was going to be one of our questions to you.
here, go to chat. Send everyone. Just tap right there. Send everyone.
Boy, you have to fill.
So I'm going to put that back up there. Does anybody else have anything else that they want to refinance of the par? Oh,
A lot more refinancing than we expected.
yeah. Any new info is valuable to me. Okay. Now, how do I? Let's see. Pop out of this and go to share and go back to our PowerPoint. And okay, well, thank you. I think we'll be able to touch on all of that in terms of refinancing the park. We'll defer to Molly, but there is one program that we will bring up.
I guess we can skip this poll here.
Say it again?
I think we can probably skip this poll here.
Oh, well, I didn't hear from is there anybody, let's put it this way, is there anybody, well, how many people are interested in refinancing? You can just nod your head, yes or no, or
Just throw up the poll though, yeah.
Yeah, people are interested in. Oh, okay, we got the poll right. Thank you. You guys ever do this before? Molly set up these polls. This is pretty cool. Lisa wrote this thing.
Are you talking about individual homes or the park?
Homes, yes, thank you for that distinction. Individual homes. So there's some interest. Okay, almost half. So it's interestingly close. So we'll touch on it. How do I go? Let's see. There we go. So I'm going to hand it off to Lisa.
Okay, so this is a fairly new program, like Molly mentioned. The state is stepping in where banks have built in the past as a lender to provide mortgages for manufactured homes. So park residents that want to purchase the home that they are currently renting, or park residents who want to replace their existing home with a newer model. It's also available to first-time home buyers moving into a park. So that can be on a community or the private land. And like we mentioned before, it is available for refinancing a home. So there are two main programs through SONYMA, and it is the Achieving the Dream program and the Low Interest Rate program. So Achieving the Dream is available for people earning less than 80% of the area's median income, and the low interest rate is available for those earning between 80 and 120% of the area median income, and that rate is just a little bit higher. There's also down payment assistance available and low fixed interest rate. And what I think is cool about this is that financing is available for up to 97% of property value. The down payment assistance loan minimum is $3,000. So that could include closing costs, and the closing costs could also actually be a gift from a relative or a friend, and it would have to fit in a bank account only for several months. Megan can speak a little bit more to that. Yeah, Megan, did you want to add anything to that?
No, I guess, for a purchase, the loan to value is 97%, so the down payment is 3%. As Lisa mentioned, DPAL is a minimum of $3,000 or 3% of the loan amount. So if the purchase price of the property and the improvements is less than $100,000, you would get $3,000 in DPAL, and that is considered a deferred loan. So you wouldn't have to pay anything. If you sell the home, I believe within 5 years, you would have to pay that back, but otherwise you wouldn't have to make payments.
Right.
And the DPAL can also be applied towards closing costs. With the traditional purchase, there are closing costs similar to a regular mortgage. With the refinance, those are generally wrapped in to the loan.
Should I go to the next slide?
I just wanted to add it can be combined with other SONYMA programs. You need help with down payment, home repairs, and remodeling. Yeah, we can move on to the next slide.
One of the, can I say something here for a second?
Yeah.
I checked into this with John a little while ago and had some conversation for our residents to see about refinancing. And I think one of the things that needs to be clarified and make sure that folks are aware of is that it has to be on a concrete slab. It can't be on piers.
Oh, well, we actually got a clarification on that.
Yeah, it actually can be on anything that is specified. It's been installed by a certified New York State installer to the manufacturer's certification.
So we
So
need
if you're doing a refinance, I'm sorry, you would need, we need to see the original certificate of occupancy when the home was cited to show that it was built according to existing building codes.
well, we need to thank Ron for prompting the state apparatus to respond and get us a clear answer on that. So thank you, Ron.
That's okay. Thank you for the clarification.
Yeah.
Yeah, and so that's for used mobile homes. Appraisal is needed, and the home needs to be built after 1996 and installed after 2006.
So the window is wide open for new homes coming in to do infill in your park, and it's a lot smaller pool of people that are going to be eligible for refinancing. But for those people who've got tens of thousands of dollars left over and have homes built after 96 and installed after 2006 by a licensed installer, there's a lot of money to be saved there.
And just another question just came up in the chat from Dennis and Trish. Why are there closing costs on a manufactured home? Can anyone go into that?
That is because it's, oh, sorry, I was going to answer, but I can not.
You go right ahead, Megan.
Well, because this is a traditional mortgage loan. Usually with mobile homes or manufactured homes, you get a chattel loan, which is a little bit more like a car loan. A mortgage is different. There's some recording fees. We look at an escrow deposit for lot rent, if that's, I'm not always doing that. Attorney fees, it's more like a traditional mortgage. You have the protections of a traditional mortgage, but you have some of the, costs.
And conversely, yeah, well, along the lines of protections and costs is your home cannot be taken by the repo man. This is subject to the foreclosure process instead. So we're down. So keep going, Lisa.
Yeah. So then these are just the rates for the low interest rate program.
And we just added Cattaraugus, Chautauqua. It's really like all of Western New York is 68 grand, and it's like 82 grand for the other rate, which is so it's currently 2.8, and I think it's 3.5 at the higher rate if you earn 82 grand for a 1- and 2-person household.
Okay, so time for a poll. Who are SONYMA mortgages available to? Manufactured home renters who would like to purchase the home in which they are already residing. First-time home buyers looking to move on to private land or a park community. Current manufactured home residents who want to replace their existing home with a newer model. Or manufactured home owners looking to refinance the debt on their current home.
Or all of the above.
And Anne, while folks are answering, Anne just asked in the chat, what about homes manufactured after 95 but installed before 06?
Megan, do you know the answer to that one?
Yeah, I guess there were some building code changes in New York State that took place in 2006, which is why they made the decision that it has to be cited after 2006 to be considered for refinancing. So unfortunately, if it was cited prior to 2006, we wouldn't be able to do that.
Yeah, that's the year when they had the installer licensed, I believe, right?
Mm-hmm.
Yeah. Yay, we all got it right. Oh, I stole the thunder from this slide. Sorry.
I think the poll results.
Okay, keep going then.
Yeah, so now I'm gonna hand it off to Megan to go through what the journey was like for some of the first applicants.
All right. As Lisa said, my name is Megan. I actually work for Home Headquarters, which is a CDFI in Syracuse, New York. CDFI is a community development financial institution. We function a lot like a bank as far as mortgage lending, home improvement lending. And we have partnered with SONYMA to originate all of their manufactured home mortgages. So my background is in underwriting and mortgage origination. This program was, I don't know who's
Molly,
TV
could you, yeah.
All right, so the program, it definitely took a while to get it off the ground. There were a lot of issues to be worked out, a lot of kinks to go through, and we went through, I think, just about all of them with our first applicant. But we have closed one mortgage. We've gotten it recorded, so we've determined that yes, even though we wanted to do this, we know that we can. The building process went really smoothly. We were engaged with the retailer and installer all through the process. The day the loan closed, we paid the deposit on the home. They started the site improvements. A couple weeks later, it was delivered. We made another advance, and then probably within less than a month, she was able to move in. So it was a fantastic experience. Did take a little bit longer than we would have expected, but it went really well. This was up in Clinton County. And I will tell you now that we have 2 loans that are with attorneys to close. So they should be closing really within, I think, the next 2 weeks. One of them is in Cayuga County. The other one is down in Sullivan County. So we're definitely branching out all over the state. We'd love to do, hit every county if we could. And I know this is going to save a lot of people a lot of money as far as interest rate, and definitely allow some people to get into newer homes that they may not have been able to get into. So a year or 2 ago, I didn't know anything about manufactured housing, and now this is what I live and breathe. So yeah. And if anybody has any further, mortgage specific questions, I know my contact information is on the end of the presentation, so you can ask questions now or reach out to me later with any.
And Molly, you could send this PowerPoint out, right?
Yes, I forgot to mention that I will be sharing the slides with all of you after the fact, and this presentation, which I'm recording for anyone who jumped on late.
And feel free to type in your questions if you try to answer them.
So now we're going to go through some of those burnt orange flyers that we want handed out, and that's kind of the rights and responsibilities. And as board members on resident-owned communities, I'm sure you guys are all over much of this, so it will probably be a review, but it might be interesting to see what is new information. Yeah, and if people could hit mute, or if Molly, if you could help with some muting. So is everybody familiar with the fact that you need a lease rider when you have a lease? Right, so the state is now requiring all mobile home owners, including co-ops, to make sure there's a lease rider included in the lease. And so I don't know if that's news or not to people. And it goes over many things. The thing that jumped out for me, having visited dozens and dozens of manufactured home communities in Western New York, is that they do require that the rules and regulations for the mobile home community is posted in a conspicuous place on park grounds, which is like, maybe 2% of manufactured home communities that I've visited actually do this. So I don't know if you guys do that, but the state is asking you to.
So, sorry, John. Beth asked, is the lease rider for all ROC communities? All resident-owned communities?
Yeah, so yes, all resident-owned communities, all privately owned communities, any communities owned by a nonprofit So wherever a community, there's community ownership and resident is signing a lease for the land that they're placing their mobile home on, you need a lease writer. And, you know, and so it goes, the lease writer goes over the warrant of, oh, I'm going to try to pronounce it, habitability. So obviously, what you do day in and day out is make sure that the water supply, sewage facility, electrical, gas and fuel, trash and disposal, all that stuff is taken care of. So here's the thing. If you know anybody, so some of this is going to be stuff that you already know. If you know anybody in another manufactured home community, we are really hoping we can deputize you to help spread the word about this information. So we're really trying to get the word out to everybody, and you're probably, you know, the folks who least need to hear this. So if you know other people, please spread the word. And then, you know, it goes over the grounds for eviction.
Sorry, I missed another question. Carolyn and Steve asked, can the mortgage be for the co-op or just for individual residents that would like to purchase?
Yeah.
The Achieving the Dream and low interest rate is just for an individual who is looking to purchase their own home.
And we will go over the Home Advantage program in a little bit. And that addresses financing for the whole community.
And Patty's looking to just clarify, residents have copies of the rules and we have it in our office. Must it be posted in a public area such as the mailroom?
Well, actually, if we move on to the next slide, we have another poll. When and where can the tenants view the park rules and regulations? By inquiring for a copy at the park office, posted publicly on the park grounds. When they sign the lease, they get a copy, or answers to and three. Did everyone get a chance to answer? John, you want to go to the next slide?
Oh, okay. Do you have the answers? Molly, do you have the post the answers? Oh, there they are. Yeah. Okay. So,
So the answer is 2 and 3. It can be posted publicly on the park grounds, and when they sign the lease, they get a copy.
yeah, so please
It needs to be both.
So,
please.
sorry, so publicly, so would Patty's office versus mailroom dilemma? So the office is not like, right, Patty, you can't just walk in anytime. It is locked and has certain hours. Is that still considered publicly, or would they need to also post it in the mailroom?
That is a really good question, but I guess I would suggest posting it either on the office window or in the mailroom also.
Yeah, I think the spirit of the law is people should be able to see it all the time.
Yeah, as long as people can find it. All right.
So you guys, you heard about the Tenant Protection Act, and it has an impact on mobile home communities in terms of rent increases. So all park owners can increase rent by 3% each year, but you could also increase the rent by 6%. And that's allowable when you're in the position to show that taxes and infrastructure investments or just operating costs justify a 6% increase. However, 6% will be the increase until a resident challenges it in court. So it's 3% or 6%, and 6% will fly unless it is challenged in court. So there's a lot of back and forth, weighing the interests of the owners and residents in this rule. So this does not, again, this does not relate to, apparently my understanding is it doesn't relate to any of the resident-owned communities on the call today. But if you do know anybody in another manufactured home community, which does rent to own, there was a situation where owners were taking the rent for the lease rent, but also payments for the home itself. And just before people were able to take possession of the home and buy it in total, they were evicted. And then they would lose all the equity that they had put into their home. The new law clarifies that and says, oh no, you need to give back the equity even if the residents are evicted. And also it changes that all the disclosure documents need to be shown, made available at signing, because in the past they were, people were getting surprised as they were moving in. So those are two changes. And then again, another thing that does not apply to resident-owned communities, but if you would spread this, no resident of a manufactured home community in New York State should be, no group of residents should have to be subject to being kicked out of the MHC because a new developer bought the park and wants to change it into condos, because residents now have the right of first refusal. So residents can form, they have 140 days to form a residents association and do as you all did, which is buy the MHC themselves. So this is, the state has put this in place to try to preserve as many manufactured home communities as possible.
All right, time for another poll. What is cap for rent increases? 2%, 3%, 6%, or answers 2 and 3?
Should I share the results, Lisa? Do you want?
Yeah, if everyone's
Okay.
all set.
Yep.
Go ahead. Yeah, everyone got it right. The answer is 3% and 6%, like John said, unless the tenant challenges the 6% in court and has valid grounds to do so. On to the next step.
So this goes to answer those questions. Did you want to take this one, Lisa? Or I'm taking it. I'll take it.
You got it.
So this is the financing that is available for mobile home, manufactured home communities. And since the pandemic, this funding has been shut off, and we've been told that the funding will be available again in the fall, hopefully in the fall. So come September, we'll be knocking on HCR's door to check on the availability of the funding. But as you can see, it's available to help finance rehabilitation of park infrastructure, sewer, septic, electrical systems, stuff like that, or refinancing existing debt on parks. So this is that program. Manufactured Home Advantage Program.
All right, time for the last two questions. What qualifies as a permanent foundation? Cement slabs, below frost line piers, 1 and 2, or anything installed by a licensed New York State installer per the manufacturer's direction. Go ahead, Molly, whenever everyone answers. And the answer is anything installed by a licensed New York State installer per the manufacturer's direction.
Right. Yeah, because the manufacturer will be talking about flood zones and things of that nature. Yeah, if people could hit the mute button. I'm getting a little, people have got the radio on. Okay.
All right, and the last question. How much financing is available? Up to 100%, up to 97%, up to 85%, or any amount? Up to 97% is the right answer, but I believe that last 3% has some assistance available. Megan, is that correct?
Well, if you're making a purchase, the borrower does need to have 1% of the purchase price in their own funds to put into the transaction. DPAL can be applied to the rest of the down payment, and then you know, if there's anything left, it can go to cover closing costs as well.
Right, so that would look more like 99%.
Well, you can only
101.
finance 90% of the value. So either way, a down payment of 3% has to be made. 1% of that needs to be the borrower's own money.
Okay.
They can, you know, get a gift from a family member or something else to cover that, or use DPAL to cover the rest. But 3% of the value has got to be put down.
So we should let you in on a secret. Megan is not looking past 5 months into your bank accounts. So if money flows into your bank account 6 months ago, that's going to count.
Right. Otherwise, if it's going to be a gift from a family member, yeah, if you want to use that as your own money, you'd have to get it a little bit sooner. You can get a gift in addition to your 1%, and then I can just get a gift letter from the donor and see it in their account. But yeah, if it's in your own funds, it has to have been in your account for a couple months.
Right. Well, and there you have it. Let's open it up for questions. Just want to point out that this is, Lisa and I have the yellow region of New York State, and Megan has the salmon colored region, and then Kevin and Haley have the blue and the green. We think Flannery has Long Island. Any questions or answers, or any questions, and we'll provide answers. Well, okay, let's go to the chat.
I have a quick question. We're installing a brand new home. It came from Kentucky. It's all rated for New York State. But when I got here, our town said, oh no, you have to have a licensed engineer draw up the building pad, and it has to be stamped by New York State to get this thing set on the property. And we had which was an added expense we didn't know about. So what you're saying that we go by the manufacturer, can't always go by the manufacturer because there's town and county laws that supersede what Kentucky says. And there's, I guess I don't understand that whole part, because it's up to the town I mean, they said it has to be on piers, it has to have a stone foundation underneath our base, or we put it with foundation and a pad.
That's why we would be looking for the certificate of occupancy from the municipality. So if they are granting that structure a certificate of occupancy according to their own building codes, then that's what we're looking at. Anything that they might tell you about the unit prior would be between, you know, the borrower and the town or the municipality.
Dennis, could you say more about what the difference was between the Kentucky manufacturer and the town, the municipal?
The engineer we hired took the drawings and copied them exactly with the piers, and I said to him, we could have just went with the piers. We opted for the piers with a foundation underneath a slab so that it's a neat, it's better maintenance. But he took their drawing, and all it really was the cost of us to get a licensed stamped engineer that said New York City.
Got it. All right.
That kind of sounds like somebody at the town wanting to cover their liability.
Yeah. Well, I assume that it's the same in every municipality, that it has to be a licensed drawing by New York State. They won't take some out-of-state drawing.
Well, you'd be surprised. There are really, apparently, and I'm just coming to find this out, there's a really vast variability between town halls and how much they want to get in your business.
I had to have a monolithic pad back in 2001. It's something when West Valley made me do. So it's been around for a while.
Any other questions? That was good. That prompted a good conversation.
Yeah, I have a question.
Leo?
How does your slab relate to the codes in your area, like our North Hornell codes for our town?
What was the phrase? What the code?
Our local codes.
Yeah.
And according to what we were told, we have to go with what our local codes are, no matter what our manufacturer tells us. We were told we had to go with our local code enforcement officer.
Well, that's obviously true from the town's point of view, but so let's make this distinction. So there's what the town wants you to do, but then there's how do you get the money, right? So the underwriters want, at a minimum, that it be lined up with the manufacturer, and then the town. I can't imagine there's a town that would have anything. My assumption is that the towns are all going to have a higher bar than the manufacturer, and so the underwriters are going to be fine with that. They're going to be fine with the higher bar. So it's going to be an extra headache, but I can't imagine a situation where the town is going to make you lose out on your mortgage financing. Correct me if I'm wrong, Megan.
The town will end up trumping anything. What the town wants you to do, whatever you have to do to get a certificate of occupancy, you're going to have to do. When we would have to assume that they would take the manufacturer's advice or requirements, that they wouldn't go against those. I guess, I don't know if this is a good time, but I realized I probably should have done a quick summary of the mortgage process. So I don't know if you want to keep going with questions, and I could say that real quick at the end. But either way, whatever the town wants is what's going to have to happen.
Otherwise, you can't get a certificate of occupancy for the home that you occupy. So that's no good.
Exactly. Yep.
So tell you what, Megan, why don't you go ahead and launch into that? We're at 6:40. Is it okay if we buy another 5 minutes, everybody? We said it'll be a half hour. Can we go to 6:45? Does anybody have to jump off?
Sure.
Fair enough. Megan, go ahead.
Okay. So anybody who's interested either in purchasing or refinancing can get in touch with me. What I would do is start you out with our pre-qualification application. It's definitely easier than a traditional mortgage application. I'd collect some income documents from you. So pay stubs, Social Security award letters, any pensions, any sorts of income. I'd look at that. I'd look at your bank statements and 2 years of tax returns to make sure we're going to get you into something affordable. When I look at that, I'll be able to give you an idea of how much we would be able to finance for you. That's a formula based off your income and your finance debt on your credit report. Going into credit a little bit, SONYMA does not have a credit score requirement, a cutoff, or anything like that. What I'm actually going to be doing is looking at the report. As long as you have 3 trade lines that have been active for 18 months and you don't have any open collections or judgments, it's a go. If there are collections or judgments, they would just have to be paid prior to closing, or I can refer you to a housing counselor to help you into that. So once we've worked with pre-qualification and you know your approximate purchasing power, you pick obviously the park you want to live in, the unit. We can finance the cost of the improvements. So the cost of the slab, the piers, whatever has to happen goes into the loan. We do order an appraisal. We'd also talk with the park and make sure they are on board with this, although I would assume with the audience here, your park is going to be on board with it. Because with a traditional stick-built home on private land, you're mortgaging your interest really in the land and the improvements on it. With this program, your park is granting you a leasehold, and you are mortgaging your interest in that leasehold, which is just why we need the park's buy-in. So going back, once you know your purchasing power, you pick out your park, your lot, your improvements, your retailer, everything like that. I will make sure we can get everything approved. At that point, we get your appraisal ordered. As long as the property appraises, we move you then on to commitment. We get the formal approval from SONYMA, and then we send everything off to an attorney to close. So we do have a bank attorney. You would want to get your own real estate attorney to represent you. And that's something that we couldn't put in your closing costs. It was a really streamlined explanation, but I just kind of wanted to give you an idea of how it goes. So you'd want to start with giving me a call and we would talk about it.
Cool. All right. Thank you, Megan.
And
Any
just
last? I was just going
sorry.
to ask for a last question, but go ahead, Molly.
I was just going to say that even if this sounds completely inapplicable to you and your home, thinking about infill for your community in particular, or folks who might want to replace their home that's really old, you know, you can offer this to your residents or potential residents as a financing option.
I don't know if this would be applicable to any of your parks, but I'm actually working one that we're going to be moving to an attorney this week, where the park has already cited a unit there. It's empty, and she's going to be buying this new unit from them. That's, you know, a lot easier than building a new one. So that's an option too. If there's something that's already in the park, it's already cited.
Yep, and that's what Dennis and Beth and the rest of the board at Marilla in Erie County are in the process of citing a home. So that would be a great option.
Mm-hmm.
All right, it is 6:45. Barring any really pressing questions, I want to thank everybody. Thank Molly for putting this together. And, I look forward to the next, being on the other side of this and learning more later this week.
Thanks, everybody.